Hey everybody, welcome to Trading Capital's exclusive analysis. Today's video we're discussing Bitcoin, the crypto market, the halving, some of the crypto related stocks that we need to keep our eye on over the next couple weeks, like Coinbase, MSTR, Riot, Mara, HUD, etc., and what we can likely expect in the price action. So the halving is roughly 2 weeks away. And basically, we actually have an official countdown. It's on April 20th. It just rolled over 12 days, 23 hours, 28 minutes. You get the point. So April 20th, we will be undertaking the halving in Bitcoin. And what's important is that Bitcoin goes through this process once every 4 years. And every 10 minutes, the Bitcoin network issues a new Bitcoin, and approximately every 4 years, the amount issued is cut in half. So that's the key to the halving. The amount issued is cut in half. It essentially makes the mining process much, much more difficult. So miners currently get a block reward of roughly about 6.25. That's being reduced to 3.125 BTC. So that's basically the payment that miners get once they mine a block on the blockchain. So definitely it puts a little bit of a strain on miners' balance sheets in the near term because it roughly cuts down their profit by half. So typically you will see some consolidation in the industry. Now, obviously, we've had a really, really big run up into the halving. Markets are kind of just digesting this huge run as of now. On the daily chart, one could appear to be putting in a potential bullish wedge pattern to move higher. That's what a lot of market participants are pricing in with this halving. There's still a lot of momentum, a lot of buyers trying to swoop in, thinking we're going to 85, even 200, 250, I've heard across the board in the near term. And as of now, I think that we could be going through a little bit of a distribution phase. One of the reasons I say that is because we're really struggling at that previous all-time high pivot. If you go to the weekly chart of Bitcoin, we really haven't been able to make a definitive close above that key zone on a weekly basis. You can see you got rejected off of this reversal, sell off, then you got a nice weekly close above, got rejected this week. There's still 1 day and 23 hours left in this candle. So I'm going to be curious to see if Bitcoin can get a weekly close back above the 69,000 or if it stays under that previous all-time high. There's a few intraday patterns. Right now, BTC has potentially triggered a 4-hour inverse head and shoulders. I shouldn't say potentially, it actually has triggered a 4-hour inverse head and shoulders. The pattern would be developed as such, like that, with your neckline here, neckline down sloping here, your impulse breakout candle. The upside measured move off of this intraday bullish pattern should take us roughly to about 74,000. That puts us roughly at a new all-time high according to that measured move, just rough calculations. So that has triggered to the upside, but we just have to be mindful that typically bullish patterns at all-time highs have a higher probability of failing. So even though this 4-hour pattern has triggered and we do have a little bit more upside in the tank, everyone can see on the daily chart that there's a potential this turns into a head and shoulders pattern on the daily. So if your head and shoulders pattern comes to fruition, that could indicate some potential downside in the crypto market. So again, this hasn't really triggered because you haven't tested and broken the neckline here. So right now, the 4-hour chart pattern is the pattern at in charge of the moment, in charge of price action. But again, there's not a definitive area. You have kind of a 50-50, right? You could push up all the way to 74,000 and you could fall pretty easily and trigger head and shoulders. So the risk to reward at this point of time isn't that favorable going into the halving. I think this is going to be a potential buy the rumor, sell the news type of event. And one of the reasons to back that up, I think what we're seeing across the entire crypto market. Bitcoin right now, very, very strong. You can see if we throw in the 50-day moving average, Bitcoin's trading above the 50-day moving average. That's currently sitting at 64,000. An area that Bitcoin is really struggling at is the 7-day moving average. You can see for the last couple days, we've been rejected off of that area in the near term. Now, if we go to the second largest crypto, Ethereum, look at the difference in chart. Ethereum trading way below the 50-day moving average and forming a bear flag. This is not a healthy price action chart in Ethereum in the near term. When you look at how strong Bitcoin is, way above the 50, and Ethereum is clearly lagging in a big, big way and setting up for potential another leg lower, this likely means that the total crypto market cap, if Ethereum starts to show continued weakness, is probably going to break down. This is also shaping up to be a potential bear flag pattern. So when the second largest crypto is showing a little bit of weakness, that could start to put strain on the entire market unless we go into a period where Bitcoin just has a massive rally alone due to a fundamental news headline driven market. But I'm a little bit hard pressed to think that that is going to be the case. Again, if Bitcoin does have an upside move, I think the blow off top is basically here at 74,000, just a pierce of 74,000. And then I do think you have seeing a potential for a strong intraday reversal. A couple reasons why I think that. Well, if you look at MSTR, look at the difference today that how Bitcoin reacted. So MSTR testing and breaking this little neckline pattern, not looking good. And remember, MicroStrategy is the most correlated stock to Bitcoin because it really only has its balance sheet being filled up with Bitcoin. It doesn't hold any other cryptos, so it's just a pretty much a true equity play to the overall Bitcoin price with some extra leverage. So MicroStrategy today actually getting wrecked down 11% on the session and piercing a pivotal, I mean a very, very pivotal trend line here, and this likely could lead to more downside. And that was interesting because Bitcoin had that initial sell-off today and got bought right back up and didn't close down too much. It only closed down 0.97%. So are potentially we seeing equity stocks like MicroStrategy turning into a buy the rumor, sell the news, where these levered speculation money is starting to unload and unwind their positions as we come into that halving. Look at Coinbase. Coinbase was also down on the session. What's interesting about Coinbase is you've had a stellar move to the high side. And if we go through some sort of a consolidation period like we did here, this was roughly about a 30, just over 30% down move over the course of a few weeks. If we were to replicate that same move, a 30% down move, it roughly puts us right back into this previous breakout support zone, right around this 170, 160 area in between there. What's interesting about this halving event is it's really going to kind of separate the well profitable, well established miners, and it's going to really set forth the weak laggers. And because the mining industry gets much more difficult with the halving every 4 years, it's going to force consolidation. It's going to be interesting to see if any of these companies start to consolidate and maybe get takeover bids. So Mara right now has always started to underperform the entire crypto equity market because it has that exposure to the mining. It's starting to see a little bit of that potential investors pricing in a more difficult block mining scenario for the halving event. You also look at Riot. Riot also severely underperforming despite the entire crypto market being very strong. You look at Hut, another one that's drastically underperforming. So I think that it's going to be interesting to see that there's going to be probably some unwinding in some of these miners. Historically, that's what happens, and that's what forces sometimes the Bitcoin price to get liquidated, is when some miners are forced to actually close up shop due to the fact they're not being taken over or bought out. They're actually being forced liquidated. Often, a lot of them will try to firm up their balance sheet in the initial liquidation phase by selling their crypto assets. A lot of them hold Bitcoin because that's what they get rewarded in when they solve the block equation. So historically, you have the big run up. Then you have a little bit of a fall due to minor liquidation, selling, forced selling, you name it. And then you often have a much bigger run to the upside. So hopefully this analysis has helped you all, because it is certainly a event that is very important for the overall trajectory of where Bitcoin is likely going to go. And it certainly pays to pay attention to how this event affects price action, not only on the Bitcoin commodity front, but all of the underlying equities like the actual exchange stocks, Coinbase, or the actual miners itself. There's going to be a lot of opportunity in miners once we get that liquidation phase out of the way. On that note, if you found this video helpful, please check out my tradingcapital.ca swing trading and day trading service. And hopefully everybody can take away a piece of information from this video. Thank you all.